All right, good afternoon, and thank you for your patience in being still with us today. We'll try to be interesting as much as possible to attract your attention in terms of being this late in the presentation. But let me just start by saying that what we really have in front of us is an interesting topic in terms of also cooperation, but also more in terms of how the cooperation would shape the future forwards. And this is why today in front of us we have an interesting panel, quite divergent in terms of representatives from the region, but also in terms of experience and in terms of their professional background. So I cannot start by just actually shortly introducing the panel, but I would really want to set the floor in terms of the discussion today. And just a disclosure, pardon me if I talk more about Kosovo than other countries, but that's my personal bias. That's just a personal disclaimer. So nonetheless, I'll just have to say that having this important topic and very relevant for Kosovo also, I can just say that currently, as some of you are familiar, some not really, but Kosovo has had quite a steady and stable growth in terms of GDP throughout the whole years, last at least 25 years, and which varies in the ranges of 4%. The last year, 25 was 3.3%. Expected for the year 2026 is 3.6% forecast. But all this, I can say that these were not the best years for Kosovo in terms of GDP growth. We have seen better, closer to 3.8 and 4, but that has to do with our other instabilities, which are also local, but also external. Having said that, I will have to say that not that Kosovo has a strong growth compared to other regional countries. Kosovo has a very stable financial sector, as it was mentioned quite a number of times today by previous representatives here. And in that case, I will just say that Kosovo financial sector still remains the backbone or the single source of capital so far, external source of capital for the entire economy amongst friends and family and fools, as Mr. Gold said. But in this case, I will say that the backbone of the entire economical support and GDP growth, I would say that it was quite a support from Kosovo banking system. Just to give you an idea, just last year, Kosovo banking system growth was 15%, which in numbers accumulates to almost 1 billion euros in terms of loan growth, and which is approximately 10% of our nominal GDP. And amongst that, our loan to GDP ratio was also mentioned today by our governor, that actually it's in the ranges of 63%, which put into the light two perspectives from my side, I would say. One, yes, the level of indebtedness is amongst the highest, I would say, potentially in the region. Nonetheless, it also puts for me the limitations of the GDP and puts into the light the structure of the GDP which we currently have, meaning the structure of our economy. And this puts into the light again what is the dominance of the structure of our economy, which is really consumption driven, import dependent, where our trade deficit is actually only 13% of our exports cover the imports, so significant trade dominated economy. On top of that, amongst importing goods, we also import inflation. That's another additional factor that we have to factor in on today's discussion. And on top of that, despite all these challenges, what I really see as an important component and a good asset that we can really rely on is our demographics. It was also mentioned earlier that we are amongst the youngest populations in the region, but that can really backfire if not utilized appropriately and if not in terms absorbed appropriately by the labor market. Backfire in terms of migration, and then we would indirectly actually benefit, which brings into the light again remittances. And I have to point out that the remittances so far are 1.4 billion euros for the entire economy, which is 13% of the GDP. So having said that all, I could just summarize that current economic growth of Kosovo's model is really consumption, remittances and imports. And what we would really want to move on is towards more exports production and human capital development, because we are a small country and we really depend on others in the region in terms of scaling, but also in terms of utilizing our assets. And having all this said, I can just say that there's a very good momentum now in terms of changing the economic structure, which means changing the economic structure not just by Kosovo, but also how the region also cooperates. And here comes into the light for me the European Union growth plan for Western Balkans, and which actually has four main components amongst the two I would highlight, which would all benefit here, and that's single market for European Union integration, and then it's also a regional single market for this region, incentivized by two other components, which is really in terms of financing it, and how financing it and getting benefits in terms of the whole process. So with this, I would just again put into the light two components, basically the European Union integration process of the Western Balkans, which nonetheless is unavoidable to be done through a cooperation and experience sharing amongst the countries, and all of that into the perspective of utilizing credit guarantee funds as a mechanism towards such an integration. And this, I will have to say that all the countries in the region would want to move actually towards more productive economies and towards more export driven. We have seen a very good examples today from Finvera on how this was actually enabled in terms of their economical support, and a very good explanation in terms of correlation of GDP growth and the export, which is in this case a very good example. But nonetheless, we don't have all the natural resources as Finland has, so of course, but we do have different resources that we could utilize and come to a similar results, but with different economic segments. So that's why I think today we have a very good panel on discussing these matters in terms of how we would enable such change on the economic structure of our countries and enable a better future, which is not as predictive as we were used to, as we saw also earlier today. So maybe I can just start with some of the questions in terms of my respective panelists, and in this case I would really start with a very short question, but try to get everything into one. So maybe I would, the question would be, are really credit guarantee schemes still just fixing the market failures, and have they become really the tools of actively shaping the future economies of our country? So maybe I would start with Ms. Getritai, and in this case, please, Ms. Drita, in this, I would really open this question with you.
Well, thank you, Gem. Thank you, first of all, for the good introduction in the panel. I would shortly congratulate KCGF on the 10th year of anniversary, and many more successful years wish you. That's actually, I think this panel and this topic is actually very, very relevant today. And why? Because we see nowadays that businesses or our economies in the region are really interrelated with each other. Businesses do supply, distribute, sell, even produce cross-border. So they are thinking in regional terms, but not only, maybe even global terms. But then when it comes to the financial instruments to support their businesses, well, they are really very local. We heard and we know from our partners, banks and financial institutions, that really they provide support only in local terms or only in local frameworks. So I would say, judging from that, there is a clear market gap that of course, the credit guarantees were designed to actually support. So here comes probably the why. Traditionally, credit guarantee institutions were designed to address these market gaps. We, of course, still do very much, because there is also a need, or the access to finance in our countries to businesses is still a challenge. That's why there is a need to address these market gaps. But we also have evolved during the years beyond that, and we have, as credit guarantee institutions, also enabled strategically decisions and have intervened where these market gaps have identified to also support, for example, to support sectors that would not traditionally be supported by the financial institutions. I would here take a short example of the startups, for example. When we introduced, together with our development partners, the startup facility, startup credit guarantee, the banks were really very skeptical. They would not like to deal with this segment. But then they saw the benefit out of it, and now we have a very successful product in Albania when it comes to startups being supported by the banks, and we do guarantee those loans. So this is a clear example of how the credit guarantees can actually enable also change the perception of the market, or make access to finance, let's say, shape how the financing flows in our economy. Of course, coming back to the regional cooperation, yes, we can, I think, as credit guarantee institutions, cooperate and maybe also introduce financial products. But I think that the cooperation does not start with financial products. It starts with sharing of knowledge, common understanding, building trust. And I think that we already have established baby steps on the regional cooperation between Kosovo Credit Fund, the Serbian Foundation, and also the Albanian one. We're looking forward also to working together with the Montenegrin Foundation, why not, and also beyond these countries. So I think that, yes, we do address the market gaps, but we also could do more to enable businesses that are today operating cross-border as credit guarantees.
Thank you, Drita. And in this case, well, there are gaps to be addressed correctly, which I think with a combination of tools and instruments we could all address and share your experiences. So following the similar question, Ms. Sturm, I would follow you on the same question. So please, it's your turn.
Great. I managed. Yeah. So first of all, also from my side, many thanks to the organizers for having me here, and congratulations to the Kosovo Credit Guarantee Fund. We've been in touch with you, Besnik, for many, many years, and as our president said this morning, 2018, you joined ACM. It's a great pleasure and honor. Before I answer your question, sorry, just to provide you with a background that I'm a little bit different from the other panelists. So I represent here ACM. Many thanks to Michael Gold for having mentioned ACM so perfectly well. We have 50 members, and via these 50 members, which are partly associations, we represent 172 guarantee institutions, and we have 6 partners, which are either guarantee institutions which are outside of geographical Europe or which are supranational institutions. Now, against this background, and answering the question if guarantee institutions have more this traditional task or have become more like strategic instruments, I would say that it has evolved. So, of course, the reason and the core mission remains for all of these guarantee institutions the same. It's to address the recognized market failure. And with the recognized market failure, I'm talking about, on the one hand, financial illiteracy, and on the other hand, the lack of collateral. But then, of course, we also see that there is a tendency that the money is channeled for certain and specific purposes. And how is this done? So on the one side, there are policy objectives that are set, like, for instance, ESG, digitalization. We also had it in the past that, for instance, BP France from France, at the time SPGM from Portugal, today they are called BPF, they were asked by their ministries to foster academics. So they said, we do not have sufficient academics in Greece and in France and Portugal at the time. So they asked our members to provide guarantees for student loans, which are apparently quite risky. So it can happen for these policy objectives. Then of course it happens for entire sectors. So when I started working for ACM back in 2013, there were very few members who provided guarantees in the area of agriculture. Today we have 25 out of these 50 that are active in agriculture, and 4 of them even exclusively for agriculture and rural development. And then of course there is this mission, since they are anti-cyclical, to stabilize the entire economy. And that happens in crisis like we had extremely the case with the COVID-19 pandemic. So we collect the statistics from our members, and the volumes from outstanding guarantee volumes from end of 2019 to end of 2020, they tripled. So that was really amazing and increased by 200%. So I would say the core mission remains, but it really evolves.
Thank you. And taking a step further into this topic, in other words, can credit guarantee funds really steer towards strategic sectors on their own as a stakeholder, or should this be alignment amongst other governmental institutions? How important is actually the role of credit guarantee funds on steering towards more strategic sectors such as innovation, manufacturing, and exports for all the countries in the region? In this case, Ms. Efemia, maybe we could start with you, and then we take it onwards. Thank you.
Okay, thank you, Gem. First of all, I would like also to take the opportunity to thank Vesnik for the invitation to participate at this conference and to congratulate on the anniversary. And regarding the regional cooperation and cross-border cooperation, definitely I have emphasized several times today, we really need to establish this cooperation and maybe to harmonize in the future some of the regulations in order to expand cross-border guarantee schemes. As mentioned in the previous discussions, there is no clear answer what is the best approach, like to have market-driven guarantees or to have a strategic approach when you allocate the guarantees, because each of the concepts actually resolve different type of problems. And it's definitely up to the country or up to the government what trade-offs they should take, or as my colleague likes to say, what is the risk appetite level that the government or the country should accept. When we have market-driven guarantee schemes, it means that they are based on the idea that they should fix market failures, like information asymmetries, information gap, or lack of collateral, and then it's up to the market to decide where the funds will go. And actually experience shows that this approach is generally efficient, it's sustainable, low operational cost, diversified portfolio, there is no risk for concentration in some risky sectors. But on the other hand, it will turn out at the end that the market is underfinancing some of the, let's say, risky sectors or some segment of the companies that are startups or innovative companies, early stage companies, which are also important for the economy. So as we heard, guarantee schemes has evolved. They have started introducing different type of products. As in Kosovo Guarantee Fund, we hear that there are several windows, and they should address the needs of these segments of the market, and it's usually connected with specific eligibility criteria for giving priority to some sector, or maybe higher percentage of guarantees, innovations, exports, or implementation of ESG standards recently, or maybe in crisis period like COVID, it was counter-cyclical use of these credit guarantee schemes, but definitely there should be, I will say, cautious approach, and to have these strategic exceptions in line with government or national strategies, and to be aware of the risk that will happen when you apply this.
Yeah, thank you. So in other words, a short answer may be a combination. Fixed market failures when they are needed, but also in order to steer, there should also be, I would say, cooperation and alignment with other cross-institutional in order to address strategic components. With the same question to Drita again back.
I think on this topic we should be really careful, and I think that the success would be on balancing between being market-driven but also strategically driven, because we should, as I believe, as credit guarantee institutions, as it was also mentioned today in many of the panels, we should not overcrowd the market. So we should operationally be market-driven, so to offer something that is really missing and needed in the market. But that have said, depending on whose needs, so if we look at the needs of the businesses, they are sometimes a bit different from the needs of the financial institutions, and we do work through financial institutions. Financial institutions are our clients. So do we look at their needs, or do we look at the needs of the economy as a whole? And having said that, I think that we can do both. Most of our institutions, they were also founded by using public resources or also development partner funding. So we also have a development mandate to fulfill, and it is expected that we do have also a development impact in our economies, and we can say that we successfully do so. It was presented today even from the survey or the report of the KCGF, the impact that the credit guarantee has. So we cannot ignore our development impact. We should be proud of it and really develop it further. And that can still stay within the market-driven context. So I think we should balance and find the right balance between staying within the market needs, but also be development driven and impact driven in our economies, to align strategic priorities also of our governments and our economies.
Thank you, Drita. Back to Storm, your take on this question.
Maybe to shortly complement, so I fully agree we have to strike the right balance between the need for higher productivity, which you reach then with policy objectives, but then also with economic stability, which you of course achieve when you address the traditional market failure. But we also see that there is a shift a bit away from this neutrality function or neutral function. For instance, last week we had meetings in Warsaw with our member BGK, and during the event they had an international conference combined with it, and during the event they signed 6 agreements, so with 6 individual banking groups for guarantees for dual use and defense. And they had signed 10 before, so this means they have now 16 agreements in place for dual use and defense, and the conditions are extremely favorable, no fee and 90% coverage. So there you see really like this policy-driven approach to foster this segment there. And we have it also at EU level, where the counter guarantees or guarantees from EU side are also linked to policy objectives. We have 4 windows under a program called InvestEU, and only one is the general SME window. The other 3 have like innovation, digitalization, ESG, sustainability, and social economy. They have these policy objectives. And I think in this context, when you have these policy objectives, it really becomes extremely relevant what Hille said this morning, that the way you do this, so we see, for instance, with the sustainability window, if I'm not getting too long now, we see like tendency and consequences that are not really positive. So, for instance, the reporting requirements attached to this window result in the fact that our members support more the bigger M's from SMEs than the micro ones, because the bigger medium-sized enterprises, they are more easily capable to provide this information that is required by this InvestEU program, or that certain sectors are entirely excluded. So one of our Austrian members, AWS, excluded entire cooling and heating because they said in this area the reporting is too difficult for us. Or what happens then also is what in Finland is now the case with InvestEU, that the EU guarantee is not used for the own guarantee, because then Finvera said we don't want to oblige our partner banks to get all this information from the customers. So they use the EU guarantee for their own promotional loans, meaning there is one level less, which in the area of guarantee means then less leverage and less beneficial use of public funding. So it's also decisive how you design these programs and products then.
So it's about having right components and also mixing in terms of the strategy and strategic orientation, and also market failures. So it comes to an all being a balance. Thank you for the answers. I would maybe now go to Mr. Kurt to take us to Turkey. In terms of, for those of us present in the room that we are not really familiar with Turkish model, can you tell us more about Turkey Credit Guarantee Fund, and also how you have achieved in terms of scaling with the SMEs and your model overall so far?
Ben Türkçe devam edeceğim müsaadenizle.
Tamam.
Çok kısa aslında hikayeyi aktarmak istiyorum. 1991 yılında Türkiye Kredi Garanti Fonu kurulmuş oluyor. Burada Alman GIZ'le beraber girişi yapılmış. Ama hikayenin asıl kısmı 2000'lerden sonra başlıyor. 2000'lerden sonra bankaların sisteme ortak olmasıyla bizim belki en temel farklılıklarımızdan bir tanesi Türkiye'de, Türkiye'nin hemen hemen bütün bankaları bizim ortağımız. Onlarla birlikte hareket ediyoruz. Burada da etkin olan temel yöntem aslına bakarsanız hazinemizin, Türkiye Cumhuriyeti Hazine Bakanlığı'nın vermiş olduğu kontra garanti desteği. Bu gerçekten Türkiye'de ciddi bir hacim oluşturuyor.
İngiliz comportiona? Okay, was dat? Full. English. Yes. In this aspect, the KCGF stands a little bit behind so the guarantee fund stands a little bit ahead, so we would like to thank GIZ in this respect. All of these have been achieved with their support, and of course ICMC, the credit guarantee funds also in Turkey and around the world, we take models from them, and they were quite beneficial in this respect, and to the point we have arrived. First, starting with the KfW, they in Turkey they have showed brought a lot of programs that are in close cooperation with us, and there are funds that we use for the second or third round now. And there is a specific credit grant scheme, and in Turkey, being that Ministry of Trade or the Treasury or the leadership of the different resources or those that we received from the KfW or the others, they constitute a quite a good foundation. They do not overlap one another, but they develop in cooperation. Of course, the numbers have changed in relation to the last years. In Turkey, there are around 4 million companies that which are the companies that in fact are are our target, our purpose to reach them, but we also have given guarantees for one third of them. Those those firms or those SMEs. In the last year, we have provided guarantees for around 5 billion euros, and in this year we intend to double it. And with the banks, we are in closest cooperation possible. The uh, the portfolio of the guarantee systems is perhaps the key thing that we are having in with our companies.
But thank you also to the persistence of our development partners, KfW in this case. Thank you. We have managed to somehow have a structured cooperation. For many years, we used to have ad hoc cooperation, meaning we needed something, we called whoever we knew at KCGF, or they did the same. So it was mostly like need-based, not strategic, not organized, not structured. So from last year, we have moved beyond that, starting to structure and organize our regional cooperation. So why don't, going back to the question, why don't we see more cross-border guarantees? Well, first of all, before for cross-border guarantees to exist, there should be cross-border loans. So are our financial institutions ready to do that? Maybe, maybe not. But I would believe that with our intervention, maybe they will start. So by reducing what we can do as guarantee institutions by cooperating is reducing the perceived risks of the financial institutions. Also, as I mentioned before, a very important ingredient in the cooperation is the mutual trust communication. So I think that we have already established very good foundation for the regional cooperation to go beyond now and develop also with financial products. I want to also mention here for the case of the successful cooperation, also the local cooperation in Kosovo, which from our point of view is somehow unique. And maybe you don't realize it here in Kosovo, but looking at it from our point of view, I think that Kosovo is an excellent example of local cooperation between government institutions, between regulators, between financial institutions, development partners, and also the Credit Guarantee Foundation. So I believe that this very, very good cooperation also helped the very good success that KCGF has achieved so far. And we in Albania actually have a lot to learn from that. But I want to bring this as a successful example that we can use this, I mean the case for cooperation and what it can achieve, to then use it for the regional cooperation. And we can see that what can be achieved when we do cooperate as institutions. We can achieve much more than we can do, I mean, individually. So having said that, yes, I do believe that we have started the foundations of regional cooperation. Of course, we have a lot of things to do beyond to, let's say, develop these cross-border guarantees, which I don't see undoable. But again, I believe that the foundations are there, and trust and collaboration really is already there, so that's a very good beginning of this collaboration.
Yes, Drita, thank you, and I can just shortly answer your question. Yes, there are cross-border lendings coming from banking sector. So coming back to you, Ms. Sturm, with the same question, what's your take on this, and is it a matter of capacity, or is it a matter of mentality, or is it a matter of ice-breaking that we have to start with cooperation?
Indeed, it's not evident to have cross-border guarantees. One of the reasons is, like, when I look at these 50 members that we have, 32 of them are entirely public, and 8 of them are private but have public support. So, and of course, from the public side, there is then with taxpayers' money also the interest to benefit the specific region, or if it's a national scheme, the respective country where the guarantees are provided. But from EU side, of course, there's also the will and the wish to do more cross-borderly, and it was said before, we really need to finalize the single market. And I get back to this program InvestEU, where I take an example from our president, Guy Selper. His guarantee bank is in Baden-Württemberg in the southwest of Germany, and so has borders with France. And when his guarantee bank uses this InvestEU counter guarantee, they can also use it when a company from Germany would like to have a subsidiary in France. So then, in a sense, it's already cross-border. But what I would like to emphasize is, of course, this monetary aspect is important, but at least important to my mind is also the cooperation between members and national guarantee institutions as such. So just to give you an example, what happens. So, for instance, last year we received a request from our second Turkish member, not from KGF, but from TESCOM, and they wanted to have like the contact details to facilitate a visit here in Kosovo, what they also then did to have this personal meeting and the personal exchange. Then we have members that sign memorandum of understandings with each other, like for instance our Portuguese member BPF with one of our Slovenian members, Citbank. What is the content of such a memorandum of understanding? There is, for instance, then technical exchange, so that you exchange stuff, that you learn from each other really operationally on the ground. Then we heard it before, what also here, I was really impressed by this, how many interactions you have in your supervisory boards. So I know also that Pascal Lagarde from BP France is in the supervisory council of ILTE, our member from Lithuania. So there are lots of these kinds of constellations. And then, of course, there is what KfW is doing, what the World Bank is doing, what Michael Gove is doing. This is also happening between those national promotional banks. I remember that in 2017, the then Greek government signed an agreement with BP France, one of our French members, to help set up and bring back on track the Hellenic Development Bank. So there are lots of other forms of collaboration which I think are at least as important as as trying, and of course this is justified that we should do more in this area, but also to have not only cross-border guarantees, but really to learn from each other. Thank you.
Yeah, it's important for us to get examples of more developed countries which we could reply and duplicate and actually use it in here, which we don't have to invent already invented. So, with a similar question, Mr. Kurt, in terms of how do you see really the future of
Indeed, this program has a lot of importance in terms of exchange of information, and beyond that, each institution of the credit guarantee is mandatory for it, or is obliged to have a serious investment in information technology, because most of the institutions nowadays have digital products, and building or these developing of these it's one important thing. We are speaking about the risk model or the rating risk, and the banks are having a serious investment in this regard. And in this respect, the exchange of information, or the door for the exchange, should be open slowly and steady. I don't know, but in Turkey I did not have such an exchange with the Turkish companies, let's say beforehand. But before I did this in one and after another, it would be much better if we could have this jointly, and to have them through the cloud system or another way. This could really lower the cost significantly, and also the I- information regarding the productions of this category should be preserved. Maybe this is easiest one, but the most needed one, of course, the personal exchange, mutual personal exchange, is something that could be done easily. Let me underline this as well. The credit guarantee funds, being that in regional level or the European level, are quite advanced. There could be some exceptions there, but in general they are quite strong, resilient, and each and every guarantee institution are at the point when they should vest trust in one another, and to have mutual uh, cooperation between two or more countries, and that can be strengthened with more resilient, more strong structures, powerful structures. The banks, of course, are much more powerful. We are not even close to the banks, because banks have kind of reached also the neighborhood level. They know people there, and we need to establish a portfolio guarantee system that would support these banks. We are not obliged, or we are not compelled to support the banks, but we will have kind of a facilitating role in the respect of the regional trade relation. I would like to underline that most of the countries in the world, they have a trade which they are in their region, and as soon as there is a crisis, the crisis strikes, we immediately see a lot of obstacles, constraints, which are appearing in the larger, let's say, or wider trade. Therefore, it's much important to be focused also on the regional and local solutions. With regards to the Balkans, there is an issue which also is for the entire world, and that is AI development, which can foster, could bring a new problem, which would lower the employment level of employment. And I think that, at least this is my my personal opinion, that integration is quite important at this stage, and we as a Turkey guarantees fund we think that we should have any ideas how to get to find a way out of this, and we should of course apply the mutual principles, and indeed the uh, these rules should not be applied or imposed by the guarantee institutions uh, by themselves, but because each and every institution, each country has its own the economy, how it develops, but also the credit institutions or funds should have their own policies, and in this regard, the SMEs and then in the level of small and medium enterprises, we can create or establish a mechanism that could resolve these issues in a very simple manner. However, undoubtedly, and the system of portfolio should be operational. We should have the banks should have access to the information, and also countries should have a cooperation in trust, in mutual trust.
Cooperation of overall, what would really be the role of the regulators in enhancing this process of regional cooperation? And here, I would go back to Efemia, please. That's
Thank you. Western Balkan countries, we know we are all moving towards EU. So eventually we will all, at the end, have to harmonize regulation policy regarding also cross-border guarantee schemes. This is maybe more a question to regulators like central banks or Ministry of Finance, but I will try to to give my point of view. Is that they should do this role simultaneously. They should both to be supervisory and also to facilitate the process for cross-border guarantee schemes. But they should do that very carefully and just not to distort the markets and not to take an excessive risk. The main role of regulators like central banks is really risk supervision, and they should actually ensure the financial stability in the country, to have sound risk management, and to have clear supervisory frameworks established. So in terms of cross-border guarantee schemes, they should definitely ensure that guarantees don't become a backdoor for excessive risk-taking, that participating institutions maintain adequate capital and provisioning, that cross-border exposures are transparent and properly reported, and that there is alignment on standards like underwriting, default definitions, and recovery processes. But if they keep only this role, only the supervisory role, then we have restriction to the market growth. So they must. So if they only supervise, then the cross-border guarantees should probably face problems like different legal systems in different countries, currency and transfer risks, and inconsistent regulatory treatment of guarantees, which is very important. That means that regulators should shift their role also to facilitate this process and to promote the free transfer of funds among countries. And definitely they should work on removing structural barriers, as the governor of the Central Bank of Kosovo already mentioned. They should work on harmonizing of the rules, creating mutual recognition agreements, supporting standardized documentation and reporting, and clarifying capital treatment of guaranteed exposures. So as a conclusion, I would say that regulators should create conditions under which structured cross-border cooperations will become possible.
Thank you. Nora, we have touched several items of cooperation from the perspective of credit guarantee funds, from the perspective of regulators, Now, also in terms of, we'll discuss also further with you in terms of instruments, but now in terms of the investment credibility and rating of the agencies, how much would that be really important for cross-border cooperation?
Thank you, Gam. Credibility is absolutely essential, especially when we talk about cross-border cooperation. By the end of the day, guarantees are promises, and the value of the promise is how trustful is the institution sitting behind. Therefore, credibility, and especially when the bank and the international financial institutions, let's say, trust the guarantee funds, they would cooperate more, they would fund more, and they would take risk more. From our perspective, credibility, or strong credibility of credit guarantee schemes brings many benefits, but I will list three. First of all, it reduces risk. Strong corporate governance, transparency, and well-capitalization of the guarantee scheme certainly bring trust to the sector, therefore more finance, more access to finance. The second one is access to funding. So credible institutions, credit guarantee institutions, more likely will have access to funds from donors and from IFIs if they are trustful and have high credibility. Therefore, more funding, it will enable more finance with better conditions. And the third one is the credible guarantee schemes enables cross-border cooperation. As stated previously, strong, credible guarantee schemes would trust to each other, and as I mentioned, when working locally, it would bring a great benefit. But when we move across borders, then here the rating enters, and the rating has essential and crucial role. To illustrate this, I would take an example of our institution. Kosovo Credit Guarantee Fund, for instance, is well recognized from banking sector, is recognized from the Central Bank of Kosovo.
I can witness that.
Yes, thank you. It is recognized from Central Bank of Kosovo, who has special regulation that supports the banks to release the capital for the guaranteed part of portfolio. But when we talk about foreign banks, this recognition is not always used, especially when they report to their parent banks. Therefore, we believe that rating and international standards, accepted standards, would move forward this cooperation when it comes to the international and cross-border transactions. Also, to relate with Evemia, what's said about this cross-border cooperation, we need that accept credibility and ratings to have specific mechanisms that are compatible and legal frameworks that would accept these mechanisms. So building instruments in one hand, credibility and legal frameworks in the other hand would enable this cooperation. So from our point of view, to summarize it, credibility builds trust, and ratings and legal frameworks enables or makes possible this cross-border cooperation. Without these, this would remain just a discussion in the table, and we couldn't move to scale our services beyond national borders.
I can really just reinforce what you just said in terms of initially the cooperation and the credibility of Credit Guarantee Fund, which is also shown by the presence that was here today also, but I can also say by the fact of living it in terms of our cooperation. And here I can just really thank you and really steal the spotlight of congratulating you for 10 years anniversary and really for being an excellent partner so far on unlocking quite a lot of potential locally, which we, without you, would not have done it. So again, thank you and congratulations. But we would not let you go with this question only, Nora, so one more question. In terms of, I mean, from the cooperation that we have seen also together being part of the same market, where do you see really the financing gap currently? Is it that we're missing an early stage support of innovative companies? Is it scaling the SMEs? Or what do we have currently missing on either from the model or from the instruments available currently on the Credit Guarantee Fund?
Well, Gam, this is a very relevant question because when we talk about financing gap, it's not just a point where is the gap, but how we are addressing it. Is our ecosystem addressing this gap effectively? And regarding financing gap, I think that it exists in all stages, starting from early stage innovation to scaling SMEs and at the traditional sector. But the point is that the value of this missing gap and the size of impact is different. Therefore, from our perspective, the most persistent gap remains to the scaling SMEs. And why is that? Early stage innovation businesses, early stage businesses might have support from family, sometimes support from the grants and donor programs. In the other hand, traditional businesses which belong to the traditional sector are well understood from the banking sector, have records, have previous experience, so if I can say, are bankable. And the businesses that tend to grow sit in the middle. They are too advanced for grants in one hand, and in the other hand, they are not well recognized, or their business plan is not well recognized from the banking sector. Therefore, I believe that this is where so-called missing gap is. But at this point, at this missing gap, I would list as well woman-led businesses and startups that are in the stage of moving forward. And why is that? It's because they have lack of collateral, they have lack of credit history, lack of experience, and therefore lack of access to finance. I will take an example again of our institution, what we are doing in this direction, but also I heard from Gertiana in her previous, I think in first point. We are working a lot and we are quite active on supporting these strategic target groups in both ways, by having special windows with special conditions, with better guarantee conditions, where we guarantee up to 80% in one hand, and with very low guarantee fees. And in the other hand, we collaborate a lot with banking sector, with you. We recently have signed the commitment letters with all, almost all financial institutions that we partner. And what these commitments say is to support these targets through better lending conditions, better financing conditions, lower interest rates, and with specific products, credit products or credit lines for these two target groups. On the other hand, we also offer non-financial component, which is focused on enhancement of financial literacy, digital marketing, communication, and networking. By both these two components, financial and non-financial component, we try to support these targets in these target groups in two directions: access to finance and increase of the capacities of these institutions. However, are we addressing this as a credit guarantee scheme? I can say, in one hand, yes, but not alone. It's not enough yet, because the whole ecosystem, us as a credit guarantee scheme, but also banking sector, should do more in order to support these businesses that belong to the missing middle. So without this cooperation and collaboration, without combination between guarantees in one hand and better lending conditions, we could not move forward, or we couldn't help these businesses to scale and to grow in the future.
Thank you, Nora, and I can just agree that actually if you look at the structure of the economy, majority of the companies are actually SMEs, and that's where the scale is, and that's where also the support is much needed. So being also part of the institutions partnering with you, I can just agree and say that we have also a similar focus of also it's in line with also the focus of having a diversified portfolio, which again you do it through SMEs. So thank you, Nora, for your answers. Now I would move once more to Turkey, and in the same light, can you, Mr. Kurt, can you please tell us more about the cooperation models that you really have with the IFIs in Turkey, and how do you manage that, and what was the keys to your success?
Evet, Türkiye tabii finansa erişim noktasında
Indeed, the issue of access to finances is an issue for which we need to support this. We have a large number of the SMEs, and they are increasing their export, and therefore we are supporting them as such. We have we are looking to bring additional revenues through these SMEs within the or in the on the priority policies. In also the support that we provide to the banks, we are trying that the credit guarantee fund to bring to the support of these associations, or so these also are investment banks and that are interested for the region, and that the work and operate pursuant to certain policies, their programs, and we should see if they are in alignment with our programs. We have two methods developed in this regard or in this direction. It's by providing counter insurance, and we had this also. We took one of counter guarantees. One part we assumed as the responsibility, and the other part was the other company. So the TKR had a meeting with the banks, and yes, we did agree. And apart from that, the services for the credit guarantees, by using our operational strength the banks we have facilitated the work of the banks towards the SMEs, and there are some programs which are developed only for the support of the SMEs in Turkey, who had all the paperwork in, let's say, uh, in line with the requirements. And now we have the third model that when we work with the public institutions and the programs that those institutions developed with IFIs, uh, we have a program which is focused in lowering the interest rates, and this is a model that it's quite let's say expand around the world, because in general the banks will lower the interest rate, and in this regard they become more attractive for their clients. We have our own methods, but in some of the cases it's mandatory for us to take into account also the norms, interest norms, and with that then pursuant to the agreements that we have with international institutions. We, as a country of Turkey, I don't know whether it was done the same here before with the Cosmo program, without a need now to make it as a specific source, but some programs that have been developed with the support of EU. Here the key was that the party that you have in front of you, to be in such a position to report to them as well, in order to increase the range of a program, but also it should be interested for the party in front of you.
Credibility to the funds amongst but also unlock additional potential that we have been, as Kosovo, not able to untap so far. So I could, with this part, I could say that we have finished with the questions from the discussions and the panels. So I would, before opening the floor for questions, I would initially thank you for your contribution to this panel, and I hope you enjoyed it. And I did my best on steering it. So thank you.
Thank you very much. So since we are very late in time, we are going only with one question that was received from the QR. Given the differences in regulatory frameworks and market maturity, what are the biggest barriers to regional integration of guarantee schemes, and how can institutions like AECM help harmonize standards and unlock cross-border impact?
Yeah, I think it's right, your name.
Well, the regulatory framework is, of course, first of all, strongly influenced by the EU legislation. So for many of our members, it's similar. We have one member that is under the supervision of the European Central Bank. All the others are under supervision of the local authorities. But what ACM does, of course, is, and if I may make a little bit of marketing here, we arrange and organize a lot of events. I don't know if Alice is still here. She's our event manager at ACM, to facilitate the exchange of knowledge and know-how, because we have this lucky situation that our members are not competing each other. They are not fighting for market shares. They really want to learn from each other. And this enables ACM also to be a bit different from other associations in Brussels. We have also this global dimension. So today started a very big conference in Mumbai, which was combined with the annual meeting of ACSIC, which is the network of guarantee institutions in Asia. We have Mr. Kim here, but of course his organization CODIT is in Mumbai, and we enjoyed also long-lasting collaborations with CODIT. We have these partners from other areas of the world, so we really try our best. But to facilitate really like the collaboration across border, like providing guarantees cross-borderly, we can of course try to influence our best programs like InvestEU. So like I gave this example there with Germany and France, so that cross-border activities increase. I think what is also very much appreciated by our members is the impact activity. So of course, Besnik, if you allow, we will of course also market your study from today with these impressive results among our members. We have it also as a topic at our annual event, which is upcoming in Lisbon, that our president already mentioned. So we facilitate a lot of exchange also at EU level and involving the global level.
Thank you. Thank you all, the panel. I would like just to invite you for a group photo now with a photographer.